Good morning, John. It's good to see you again. We're recording this on Wednesday morning. Overnight, markets have retreated a little from record highs. But this morning, I'd like to really concentrate on what's happening with the bond market, which is quite interesting because ever since the Fed cut by 50 basis points, I think it was the 18th of September, the bond market has retraced in the US. So 10-year treasuries have gone from about 3.65 all the way back to about 410. And it really poses the question, what is the outlook for long-term interest rates? And I think we have to put that in the context of huge government debt levels, which the IMF has pointed to. The IMF came out yesterday with an article saying that public debt across the globe should hit 100 trillion US dollars this year. John, do you think the bond market is sounding a bit of a warning bell about that?
Well, my view, Paul, is that the bond market has been manipulated for so long that the participants in the bond market really don't know how to price a bond. Now, that's a blasé statement, and I'll get criticised for it, but I think there's enough evidence there to suggest that, bonds trading below inflation for a sustained period of time, quantitative easing, which went on for a sustained period of time, still going on in Japan and parts of the world. The bond yield decoupled from the risk of inflation, and now I think it's trying to come back. The market itself is trying to come back and have a logical pricing. Now, if we think about America, we've had a negative yield curve. We've had very high short-term rates, which exceeded long-term rates out the 10-year curve. Still the case today by 1%. A more rational market is for it to go the other way, so short-term rates to be half to 1% below long-term rates. So for that to occur, which is where I think we're heading, it takes time. It takes the long-term rate to go up and the short-term rate to go down. So we're in the process of it, and I think we'll probably take a couple of years to get back to what I would call I won't say a normal yield curve, I'll say a sensible yield curve where it goes up, not goes down. I think the comment you made about the international IMF, it is startling that we have $100 trillion US of government debt around the world. Does it surprise me? Well, then when you look at $30 trillion in America, well, that explains 30% of it. So, getting to 100 trillion, that sort of head start doesn't really surprise anyone. But it tells you that the level of debt, government debt, is so high that interest rates cannot go up because governments can't afford to pay the interest. So that's where we're stuck at. And so the manipulation will continue, Paul. The question is the bond market giving us a warning? I just think the bond market is controlled by the central bankers, and until further notice, that's what's going to happen. And that's why markets, particularly equity markets, are so relaxed, because they just see the central banks manipulating interest rates and taking them away from inflation, and they get confidence from that.
But it does raise the question, what are normal rates? And if we think back to our recent history, since the GFC, let's call it 2008, 2009, up until quite recently, interest rates were suppressed at very, very unusually low levels. So perhaps our thinking about what normal rates are shifted downwards. If rates are to be at a neutral level, presumably that involves a balance between making sure that inflation doesn't rise, but also making sure that the labor markets are supported. Do you think that the neutral rate is going to be higher than, say, in the last 15 years? And that's what I'm getting at. Is the neutral rate 2.5, 3, 3.5, 4? And do you think the neutral rate in Australia should be different to the neutral rate in the US?
big question, that one. I mean, the neutral rate should at least match or be slightly above inflation. Now, it is apparent that inflation is coming down around the world. The Reserve Bank today at a conference, one of the spokesmen said that they see inflation being anchored in key areas and coming down, which is what we've been saying for months, Paul. So anyway, so it's just a catch-up going on there. I think the cash rate should be matching, if not higher, than the expectations for inflation. I think inflation is heading towards 2.5%. So the cash rate in Australia probably somewhere between 3 and 3.5%. We're 0.75 above that. So we'll probably get to where we should be in about a year's time. America, similarly. So your question about should our cash rates be similar to America? I would argue yes, because our balance sheet is much better than America's, and our growth trajectory is much better than America. So, and our budget situation is much better than America. So all things being equal, our cash rate should at least be the same as America, if not lower, based on the quality of our economy. But I think what I'm talking and saying is exactly what the bond market and the income markets are predicting, that interest rates are coming down, inflation slowed and coming down. We've got interest rates all over the place around the world. Obviously, interest rates are very low in Japan. German bond yields are ridiculously low. 10-year bonds are 2.25%. So they're, sitting 2% below America, but they're obviously going through, and they're also going through a bit of inflation higher in Germany than parts of Europe because of the transition of energy. So it is a dog's breakfast, but I think the direction is set. As you say, interest rates are coming down, cash rates are coming down, and they'll settle at a more sensible rate a year or two out from here.
Yeah. And I suppose it's worth pointing out that over the weekend we celebrated 2 years since the bull market has been running. So it bottomed in October of 22, and since then, I think the US is up something like 63%. The Australian market a bit less than that, but that they say that bull markets don't die of old age. There has to be something to trigger a turnaround in the trend. Are you still maintaining your optimism about 2025 and the outlook for next year?
I am optimistic. I just think we need a correction. It's one-way traffic at present, which is, that's not how markets behave. They trend up over a long period of time, but they have corrections, and we're probably overdue for a correction. The 40-50% gain in the American stock market, a 5% pullback would not surprise anyone pre-Christmas. So that's what I expect. For no other reason, it's almost like it'd be an exhausted rising market, so to speak. It needs a break, it needs a half-time break, and it needs to consolidate, which it hasn't really done. And to pick an event which could cause a more substantial correction is just impossible. The share market and the risk markets have been hit with every possible thing, Paul. We've had wars going on in Ukraine and the Middle East, oil price spiked and then came down, threats of nuclear attack, Taiwan now being circled by, China. I mean, everything possible to upset and cause risk pricing to go up is having no effect. And it tells me that the steady hand of the central bank is at play. The markets are very liquid. And one of the upshots of COVID was massive liquidity injection into the world economy. And I think that's what's sustaining the markets. Money is looking for a home to invest. There's a lot of strange investments, a lot of risky investments are going out there, and some people are rude the day they made them, but at this stage, everything's generally performing. And I maintain you stay invested and you diversify. That's what I say across asset classes, and that's a discussion you have with your asset consultant.
Yeah, and obviously the big event that we're all anticipating is the presidential election on the I think the 4th or the 5th of November. So it's just 3-4 weeks away. I have noted that that Trump seems to be pulling away from Harris in the certainly on the betting sites. So it's looking more and more likely. and with his promises to cut interest rates and corporate taxes, and I think the market will probably celebrate a Trump victory.
Who knows, Paul? I mean,
who knows? Yeah.
We talk about expectations. Last time he won, it wasn't expected, and the market rallied. I think there is the expectation that he wins. The markets will be pricing that in before the event, so that could be the trigger where people take profits, the market takes profit, the traders take profits. But it's in the lap of the gods, and short-term predictions are very hard. Longer-term predictions are more easy to make. I've always maintained that because the world grows and inflation doubles along. The Australian population grows, our trade with Asia grows. It's fairly easy to predict Australia will grow. It's just that, as I keep on saying, the people running the place have no idea what they're doing. So it's just great. I think a bit the same in America. The entrepreneurs run the American economy. Let's be clear, with support of the Central Bank of America and the government and the Parliament. Well, they're interesting bystanders, aren't they? Making commentary from every time it suits them to get a vote.
Just on a more mundane level, domestically, there's a bit of a focus on the banks and some of the so-called junk fees that they charge for various things. Is that of any great import?
Well, I think it is to some of the intermediaries, the companies who provide the settlement systems and the retail payment systems, where you scan your credit cards and your debit card. I think there's obviously a charge which is being put on to consumers, which, when you reflect on it, we're trying to encourage a cashless society to stop, a cost burden for small retailers having to trundle down cash to the bank and then have it counted, and that's not very productive. So what we've done is we've charged for productivity improvement, which I think it's worth thinking about. I think there's too much charged, for making the company more productive, and you lose it by increased costs. So that's what I think about that. It's a big issue. Has there been excessive profits made in that transmission system? I think there clearly has been, and so that has to be investigated. I think it's fair that credit cards are probably charged a fee, but I think debit cards, I think it's not, doesn't make sense to me. I know there's IT investment in it and there has to be a return on it, but we are saving the banks, so maybe they should contribute rather than slug the consumer. The other interesting thing is how easy it is for private enterprise to slug transactions, and I keep on saying I don't know why the government is not slugging transactions. I keep on speculative transactions in the stock market and other asset classes, and it's easy to capture fees. And what we see is the private part of the economy is very good at slugging the consumer, but the government is not very clever at slugging speculators. And if they ever woke up, they could get some of these intermediaries to collect these taxes on their behalf as money flows through the stock market, endlessly going up and down, and hedge funds play their games all day long and avoid tax by having domicile in tax-free countries. So I just watch it all with wonderment and think when the light's going to come on.
Mm-hmm. The other sort of bit of market activity that kind of surprised me was the Australian dollar has kind of fallen 2 cents over the last while, 69 down to 67, and with seemingly little prospect of us cutting interest rates before the US cuts again. Kind of surprising, but I suppose it might be reflecting weakness in some of the commodity markets, particularly iron ore. Do you think that that's just a blip?
Well, I've got everything wrong. I'm sitting here and I thought iron ore was going to trend lower, and it's bounced up to 106. I know that's lower than where it was a year ago, but the Aussie dollar I thought was going to trend up because it's logical. But we've got this overpowering. There's a conference. I read the paper this morning. There's an AFR wealth industry conference, and they're talking about superannuation in Australia going to $4 trillion. Wow. And I keep on making the point, this money cannot be invested. So it's going to the store, and it's just relentlessly selling Aussie dollars by our superannuation funds. They've got no choice because they can't invest it here. So they're relentlessly selling the Aussie dollar. No matter what the Aussie dollar is doing, they're selling it. And 70 cents and every inflow into an industry fund is now going offshore. So we can try and come up with reasons why the Aussie dollar is falling, but the overpowering constant reason is the steady selling of the Aussie dollar by our major superannuation funds who are investing offshore. Now, what they're investing offshore in is, who knows, but it's probably indexing, and they're probably buying the same old stocks that the indexes are in America. So, it is going to create a problem longer term. The Aussie dollar is going to be undervalued, which creates inflation on imported goods, inflation we don't need. And the industry funds are investing in offshore markets who don't have the growth profile of Australia. So it's an interesting dilemma.
It certainly is. John, I think we might end it there. A bit of a short one this week. Is there anything you'd like to add?
I just flagged that, I read a good article from Tony Boyd, who's obviously a friend of mine, ex-Chanticleer, regarding scamming going on in the banking system. And I'd suggest all our people watching this video should read that because I think it's the tip of an iceberg. I think the scamming activities in Australia need to be seriously investigated. One thing that Tony unearthed, which I wasn't aware of, is that there is the ability through the banking system for foreign students and short-term visa holders, when they leave the country, to sell their bank accounts. And who buys bank accounts? They're not honest people. So these transactions going through the banking system where money is going out of legitimate bank accounts by scammers, going into illegitimate banking accounts owned by scammers because they bought them off short-term visa holders, and then shoots out of the country 1 minute later, is an extraordinary problem. And what Tony outlined was an investigation by the Federal Police, an AUSTRAC, which was released, I think, 6 months ago, and they didn't tell anyone about these, what they call them, this ability for scammers to buy bank accounts and effectively short-term visa holders to be mules. I mean, it's bizarre that this thing goes on and no one has a solution. Now, it wouldn't take many smart people to come up with a solution. One is obviously short-term visa holders should not have a full access bank account in this country. But that's one solution.
I wasn't aware of that. That's really interesting. Okay, well, we'll wrap it up there. Thanks, John, and we'll see you next week. Thank you.
Thanks.